Crowdfunding for Real Estate Spring 2022 Review. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. So, as Invest Strong viewers know, since 2018, I have used the Groundfloor crowdfunding for real estate site to expand my real estate holdings. Now, Groundfloor actually has been great, and even until now, the return on the projects that I've invested in have been excellent. So, as of recent, the year over year total return on the projects that I've invested in have been around 9 to 9.25%. Now, that percentage has actually increased quite a bit since my last review back in January, and this is caused by the strong housing market, far fewer defaults, and far fewer workouts where the original agreement, had to be revised and lowered. Far fewer of those things have taken place. And also I have noticed that in the last 5 months, many of these projects are being brought to completion actually much sooner than the original setup, right? So for most of the projects, they have a term between 8 and 12 months. But in fact, many of the payoffs that I have received over the last 5 months have been in the 6 to 10 month range, right? So that reflects how strong the housing market is for these rehab and flip projects. Great. Except going forward, things are going to be very, very different. And of course, the combination of the recessionary environment that we are living in, and of course, rising interest rates. A combination of those two things will do a real number on the housing market going forward, right? So it is very, very important. Certainly, I've been doing this myself. One has to be extraordinarily cautious in the real estate market writ large, but these crowdfunding sites in particular, very, very careful in all your real estate investments going forward, right? Now, the Federal Reserve had begun to raise short-term interest rates really earlier this year. Now, uh, by Fed culture, or shall we say, their precedents from the past, they would normally move in 25 basis point increments in their increasing. However, because inflation has been particularly high and the Federal Reserve has been particularly keen in bringing that interest rate down, bringing the inflation rate down, they have begun to increase interest rates perhaps by as much as a half a percentage point, that's 0.50 basis point. And there are even rumors that they may actually go as high as 0.75 basis points increases going into the future. Now that has sent a real shock through all the markets, and certainly real estate is no exception. However, unlike the stock market and unlike the bond market or even the crypto markets, the the reflection of these interest rate increases in the real estate market will be much, much slower to notice. So for now, and I mean right now, uh, things are still going pretty good, right? But there's just no question about it. These higher interest rates in the future will slow down the real estate market. Now, the question becomes then, well, how much? And would these with this slowdown, how will it affect the crowdfunding for real estate market? Well, it's virtually impossible for me to tell because I've really only been in this since the fall of 2018, and there really has not been another environment quite like this, right? So we're coming off this massive pandemic. You've got also inflation that's running wild. We have this big crisis in Europe, and we have a demographic situation where construction prices are high, yet people still want to buy. But construction price for new materials is extraordinarily high. Thus, that's going to bring down the amount of new construction, but that's going to push up the value of existing houses, and that's just a fact, right? Now, the crowdfunding for real estate uh, area is kind of like in the middle there. So you have basically existing dwellings, right? But they will require quite a bit of renovation and upkeep to be able to put them on the market, and thus the higher costs of materials will affect it that way, right? Haven't seen anything like this certainly since I've been doing crowdfunding for real estate and since 2018. So it's very, very difficult, I would say nigh impossible, for me to be able to say conclusively how this is going to turn out. But one thing I do feel comfortable saying is and doing is bringing down the level of risk. And so, whereas I had been investing in projects that were given C grade, which is kind of in the middling credit range for the crowdfunding of real estate sites, I'm now beginning to uh, go up the credit quality chain to invest in projects that are graded as B or above, right? Now you get a smaller interest rate return on that, but the default rate is significantly lower, and I think that'll be important going forward. Also, I have uh, Groundfloor in particular has they have provided kind of an alternative to investing directly in flip projects, right? So they float these securitized notes. These notes range in duration from 30 days to as much as a year. Now, the year note, secured note that I recently put money in to the tune of about $1,500 was a 12-month secured 6.5% note. That I can do, right? Now, technically, that would still be kind of dragging behind the inflation, but I believe that a 6.5% secured return on your investment over the next year or so is the best way to go, in my humble opinion at this point, right? Because the stock market has been sinking. This war in Europe, we don't know how long it's going to go on, and how much it's going to damage all of the markets. We also don't know how long this inflation is going to remain high, right? So clearly, the Federal Reserve is trying to push the economy into, if not recession, certainly a slowdown in order to bring down the inflation rate. But boy, I tell you, that's a mighty narrow window to hit there, right? And with the aggressive actions that they have begun to belatedly take, we just don't know how that will affect the markets writ large. And with that being the case, I prefer with my new money to be in securitized returns, right? And the bank accounts and CDs and stuff, that still won't do it, right? They're still only averaging 2% or less. Not worth the time, in my particular opinion. I would prefer to do a securitized real estate note in the 6.5% range, and Groundfloor has those, right? So that's kind of what I'm doing at this point. We'll see how things turn out, but this is a very, very precarious point, in the economic and financial history of this nation and really of this world, right? The Federal Reserve is increasing rates fast, and that might be actually good because that'll perhaps get them to the finish line faster than doing it in the 25%, the 25 point basis point increment. But in the meantime, it's going to leave a lot of ruin, right? Be prepared for that. All right. So those are my thoughts for this week. Hope you found them instructive and informative. If so, hit that thumbs up button. I'd appreciate it. Also, leave me a comment. Let me know what you think and what your plans are for handling these rising interest rates and rising inflation, high inflation situation that we're in right now. And of course, subscribe. Please subscribe to Invest Strong. I'll walk you through this very precarious time. I promise you. We'll go hand in hand together. All right. Thank you so much, friends, and good blessings.